Investors have been strong supporters of our open investments. Competitive yield continues to be the primary focus, while also managing the impacts of a high level of buyer activity in the residential property market. We've also noted that the limited supply of industrial property has resulted in owner-occupiers buying land to build, which is competing with developers and driving an uplift in pricing. On the topic of industrial, I'm pleased to advise that we have recently opened a new PDS offer for the Trilogy Industrial Property Trust. However, I'll speak to that shortly. The Trust continued to deliver competitive returns for investors during the last quarter. New loan settlements were slower than anticipated for April and May, but picked up significantly in June with 14 settlements for loans across Queensland, New South Wales and Victoria. Loan repayments were high and in many cases accelerated during the quarter as developers were supported by strong construction activity and high levels of buyer activity in the residential property market. Project drawdowns continued to perform as expected. With increasing confidence from property developers, projects are now progressing and we're receiving high levels of inquiries and record numbers of indicative loan offers. We expect to see this continue through the year. We are closely monitoring both the impact of rising property prices and also construction cost inflation for developers and their projects. As an example, timber supplies have been slow across some projects, causing builders to build in steel. This in turn has caused some delays as steel contractors report staff shortages. Some relief has recently been seen, however, in the US particularly, with lumber prices decreasing significantly. The Trilogy Enhanced Income Fund continues to deliver competitive returns. Inflation expectations have been volatile, and this is reflected in the risk-free rate domestically and overseas in the US. To shield the fund from inflation, our portfolio has been positioned for structural inflation moves. We continue to hold a mix of government and credit instruments indirectly and directly, with new opportunities to diversify the fund's underlying holding regularly explored. Credit spreads, or the margin above which an investor needs to be compensated for the issuer-related risk, continues to compress, particularly within the structured, that is the residential mortgage-backed security, credit universe. We've seen continued accommodated policy at both the fiscal and monetary level. Looking forward, we note that the RBA has minimised bond buying in the secondary market as the economic recovery has been far quicker than expected. As mentioned earlier, we've recently opened a new PDS offer for the Trilogy Industrial Property Trust. The Trust was first established in 2018 and has consistently delivered competitive monthly returns and capital growth to investors. It is designed for investors seeking a long-term investment, stable income and an opportunity for capital growth from one of the most sought-after property asset classes. It currently holds 8 industrial property assets across Queensland, South Australia and Victoria, and has recently achieved a 4-star rating by SQM Research, which is great news for our advisors. To learn more about the Trust, visit our website or reach out to the team at Trilogy. Thank you very much.